Hi, it's Thursday, December 17th, 2015, uh, day after the Fed is embarked on its rate rising cycle, the first one in almost a decade, really. Um, I'd like to talk about something I've been seeing and hearing from the mainstream economists and commentators about how the price of gold will react to a Fed's rate rising cycle. And I'm not going to say, give names or anything, but you can just Google Fed rate rising cycle to depress price of gold. And that's what we hear from most, if not all, mainstream economists and commentators. That's what they're saying, that the price of gold will collapse because the Fed's going to start raising rates. Well, uh, I've done a little bit of research, not very difficult. I went into the New York Fed's website and looked at all the historical Fed funds rate going back to 1971. I'll put a link to that below my video as well. And from what I've seen, history does not show that the Fed's rate rising cycle corresponds to a drop in the price of gold. For example, in August 1971, that's when President Nixon closed the gold window and the Bretton Woods system collapsed, the gold standard system. The price of gold was at $35 per ounce. Fed funds rate were risen in that month from 5.5% to 5.75%. So 8 years later, roughly, in mid-January 1980, gold reached an all-time high of $887.50. And guess where the Fed funds rate were? Well, they were raised from 19% to 20%. So we saw a move in the Fed funds rate from 5.75% to 20%. That was the highest interest rate in American history, bar probably during wartime, during the Civil War. So the price of gold went up more than 20-fold. The other example I've got is more recent, from June 2003, when Fed funds rate were at 1%, to June 2006, when Fed funds rate topped at 6.75%. The gold price rose from $361 roughly. That was in the beginning of June. It was trading $361 beginning of June 2003. And by June 2006, after, Fed funds rate had gone from 1 to almost 7%, the price of gold had risen to $633.25. So looking, at the historical record and the data and the proof, it, there's nothing here that says that a rising rate cycle by the Fed actually depresses the price of gold. And if anything, since 2011, we've had, very low rates and a lot of quantitative easing, and all other central banks cutting rates and printing more money, and actually the price of gold has gone down. So I'm not sure I buy into this mainstream idea that the price of gold will get hammered as the Fed continues its rate rising cycle. As history shows, there's no proof for it. Take care. Have a good day. Goodbye.